It's Tuesday, that means it's Trading Tip Tuesday here at BNC. Let's talk about the Wyckoff Method, popularized by Richard Wyckoff, a trader in his own right. And I'll start with the reasons I mainly don't use Wyckoff most of the time. Much of the analysis is very easy to see, and should be easy to see right from the get-go, and otherwise it becomes extremely subjective, where I don't like using analysis like that. Now, I'm not a Wyckoff expert. The Wyckoff experts are going to disagree with me and say that no, it is completely objective. But for me, I just never quite got there. So it's basically a system to tell you, are we bullish? Are we bearish? Are we in accumulation? Are we in distribution? Are we in markup? Are we in markdown? Is there a trend? That sort of thing. We'll look at lots of examples here, but ultimately that's what it's all about. Now you can go down the rabbit hole and learn and understand all of the various vocabulary associated, the nomenclature associated with the Wyckoff method. But for me, as a visual person, I just didn't quite get there. I was just always using the fit test, the pattern fit test, right? Does this look like Wyckoff in accumulation? Does this look like Wyckoff in distribution? What's going on here? What phase of markup or markdown are we in? That sort of thing. So in general, again, you're either looking for accumulation or distribution. And if it's not immediately obvious that there's some sort of euphoric high, euphoric low, parabolic blow off top, parabolic downside, things do become flat and ranging. And from that point on, you can sort of time, it's like staging cancer, right? You can say, is it stage 1? Is it stage 2? Is it stage 3? Is it terminal, right? What does this trend look like? Or you can say, think of it as like a baby being born, right? Is this the first trimester, second trimester, third trimester? Something a little less morbid, perhaps, than staging cancer. But nevertheless, that is all of what Wyckoff is all about. And again, there's lots of nomenclature, and the Wyckoff people like to get deep in the weeds. If that's for you, if that works for you, great. You know, this is a buffet, right? You don't like Wyckoff, use something else. You don't like MAs, use oscillators. You don't like RSI, use OBV. You don't like MACD, use average trading range, whatever, it doesn't matter. But this is ultimately the stuff I look at. What is this? What is the accumulation schematic possible? What are the possibilities here? What does the distribution schematic look like? Now, much of this is going to be intuitive for many people because you have a downtrend, you form a range, you have your highs, you have your lows, and if you make higher highs, if you make multi-month highs, multi-week highs, multi-day highs, then something's changed, right? We've gone from strictly bearish to neutral to strictly bullish. And the question is obviously timing this so that you have a plan, you know what your trades are going to be, you know where you're going to be setting softer bids versus aggressive bids, you know where it's okay that you're going to be losing money here, you're expecting this range to hold, but let's say you start bidding the middle of the range, then you're not going to get scared out of a position if it actually forms a spring. Now, part of this is visualizing the possibility before it happens, and the other part of it is just finding something that looks like this before it moves to markup. For me, I'm the most comfortable just letting this do its thing because it's not always going to look perfect on the accumulation, which there are kind of two different types of accumulation. It's not, I'm sure there are more, but these are the two most common. Now, it's not always going to fit either of these. You're not always going to get a spring. Really, that's the big difference here. The phase C, sometimes it just goes sideways. EOS, we'll look at that in a second. USD, USD is a good example of this. And distribution is the same way. You're not always going to get this inverse spring. That's not what it's called. The Wyckoff people are going to crucify me in the comments. It's upper thrust after distribution or something. I don't know. You can see all the names. Sign of weakness, sign of support, lower something, breaking the ice, blah, blah, blah. You're going to come across all this stuff. And it makes sense to label it. It's not for me. I'm just looking at the pictures here. I like pictures. Words are bad, pictures good. That's just how my mind works. And so this is one of the distribution schematics. This is another, again, just doesn't have that spring, basically, that last upper thrust. So anytime in any market we are ranging, ask yourself, does this look like anything, right? Is it a chart pattern? Is it an inverse head and shoulders? Is it a cup and handle? Could it be a Wyckoff distribution? Could it be a Wyckoff accumulation? Does this look like bearish or bullish continuation? Will it break some of the rules here? You have to ask yourself that. And when we look at the BTC chart, a lot of people have been commenting that this is perhaps a Wyckoff distribution. Now, it's close to, we'll say it's close to this version, right? We get 3 higher highs. This third one fails. Let's go back, sorry. Third one fails, and when we start breaking lows, that's when we get in trouble. So perhaps we are in the last sign of support, or whatever this is called, in this region. You know, this doesn't match that exactly. But in order for this to break, we would have to make higher highs again. And you could always extend this further and say there's more upper thrusts that fail to go higher, and it's still a distribution. And that's when it just gets super subjective to me, when we have our ideal rules, but then we can just keep adding on, much like I do for some of the chart patterns. But to me, those are more obvious than saying we're still in some sort of Wyckoff distribution here if we make another higher high. Ideally, we want to have a no-doubter higher high, where this just goes, to 85K, right? Then you can say definitively it's no longer in Wyckoff distribution. Now, you can also draw this diagonally, either rising or falling diagonal, but nevertheless, same sort of thing where you could interpret this as distribution. I can see it. It's not perfect. I wouldn't point it out immediately if presented with that information, but when I compare it to the schematic, I can see it. So am I going to use that as my ultimate determiner for breaking down here and getting bearish? No, I'm just going to say we're breaking lows. That's really bad, right? We're not bullish if we're making lower lows. That just should be a given baseline standard for any of your TA. And I think ultimately, you don't even want to be in this situation where people are asking, is this distribution? Could it be? It kind of looks like it might be, because then you're already in trouble. If people are calling this distribution, then there's more than just the Wyckoff people calling it distribution. There are other reasons why this is weak here, like on the daily cloud, edge-to-edge potential, 5200 cross, 1050 cross, and there's all sorts of other trend reasons this could break down, but you don't want to be in that situation if you're bullish, obviously. Now, if you're bearish, you're elated, you're ecstatic, you're waiting for this to break lower lows, right? That's fine. And another point of consternation, I guess, trouble that I get myself into with some of this stuff is I look at it and I think, okay, this is 2018. I look at it and I think, man, this looks like Wyckoff accumulation to me. This doesn't look like distribution. This doesn't look like it could be a descending triangle. We're getting all this stuff. In phase C of Wyckoff, you often get a inverted head and shoulders as well. And so some of this is knowing when this fails, obviously, is key, because we didn't actually revisit these highs. We didn't even revisit this high. We failed to do any of that. So really, at this point in time, it would have been pretty easy to say, you know what, Wyckoff distribution's probably not on the table anymore, or certainly to a less probability, a lower probability. It had a chance, it had a shot, it failed. It's probably off the table. It's probably closer to bearish continuation at that point. So you always have to be careful when you are in between the phases and not in distinct markup or markdown. Now, one of the most obvious textbook perfect examples of Wyckoff when I first got into trading and saw people talking about it was 2015, when you get this just beautiful, absolutely angelic, cherubesque range of this. It was 200 to 300 basically. To us at that time was kind of do or die, end of the world, failed experiment type of price action, especially when you see this curvature stuff falling off the table, Bitfinex drop below 200 again. I mean, it was bad. I'm not gonna lie to you, it was bad. Didn't make any sense. I was still buying on those days because I thought I'm going to be the one to go down with the ship. Nevertheless, what you should have been looking for, what I should have been looking for at the time, and only later realized, was that this is a perfect example of Wyckoffian accumulation. You get your bear trend, basically the end of the bear trend gets super quick. It hastens, right? You can see this parabolic downside, and you get this automatic rally, and that establishes your range immediately, right? You had your consolidation here, and you get your automatic rally, and now it just basically ranges, tests support, tests resistance, breaks support, people are thinking it's, right, sky is falling sort of situation. This is typically when you get your washout, you get your fear, you get your capitulation wick, more so on Bitfinex than Bitstamp. But nevertheless, you get that, the bears are finally exhausted, and then you can actually continue your bullish ascent, or begin your bullish ascent from there. And you'll see this over and over and over again. I mean, I can show you it on silver, right? And it's weird how this lines up pretty well, and how often this comes up when, you know, this looks pretty ugly, the range, but in reality, here's your spring, here's the highs, here's the lows, and yeah, that looks like Wyckoff and accumulation, right? You even get your descending triangle here breaking down, blah, blah, blah. You break the range, then you establish markup, and you begin bullish consolidation, which at this point looks just like an ascending triangle, just like it did on BTC. So on various time frames, this will take a variable amount of time to figure itself out. For stocks and Forex, it's going to be slower. For crypto, it's going to be rather quick. This still took a year for BTC to actually figure itself out. Silver is going on, what is this, 6 years to figure itself out. So people would much rather trade BTC, most likely, than silver. But it's just great to see the pattern in multiple different places. To me, that says it's real. You know, maybe it's pareidolia. I don't know. You tell me in the comments. But certainly pretty real now that we're sitting where we're sitting on BTC, and this eventually reached 20K from that spring, basically. So silver looks good. Now we can look at other stuff. NEO, very similar situation. It doesn't always look as pretty as BTC's, like coffee and accumulation. But this took 2 years to finally, right? January 2021. Isn't that interesting? Everything's just exploding. And the table was set. You know, the silverware was polished. The napkins folded just right. It took a while for NEO. And your feelings of the project notwithstanding, like, it doesn't matter how you feel about NEO or how I feel about NEO, but the price told you that get ready, because here was your spring in March. Oh, hey, Corona, right? Everything's going to zero. Just kidding. And we begin the end phase D of Wyckoff and accumulation, and then we start our markup phases, and then they get quicker and quicker and quicker. The consolidations get shorter and shorter and shorter. We may or may not get a distribution at the end of this, but that's the type of thing you're looking for. EOS, very similar. Doesn't look pretty, doesn't look perfect, doesn't exactly match any of this stuff. You kind of get a spring in March, and then it just goes sideways for a long time, but stays in the range. And now it's seemingly pretty clearly in this parabolic advance markup type phase. Something else you can do, like I mentioned at the beginning, is just look at any range and say, what's going on here, right? Does this look like Wyckoff? I don't see it. Maybe you do. I don't know, but it should just be yes or no. You know, it should be quick binary. You shouldn't have to force it, from my opinion. Now, again, I'm not a Wyckoff person, but if I look at this, Wyckoff doesn't pop up in my head, right? We're getting a series of higher highs. We're getting a series of higher lows. It's not trending necessarily one way or the other, but it's also not painting that accumulation distribution picture, right? Lastly, again, I'll just say you don't necessarily know where the markup phase is going to lead, right? We didn't know that we'd get the 20K price level during the spring in BTC, right? We didn't know necessarily that Monero is going to reach a new all-time high, retest all-time highs when you get this Corona spring at 30, right? You don't know that, but you don't care, because you know where this accumulation could lead. You know the potential. That's the key, is having an idea what could happen next. Not necessarily predicting it, not necessarily even being reactive or proactive, but just saying, okay, charts are people. People don't change. This is all the same thing over and over again. Time is a flat circle. All these charts are trying to tell you the same thing. Bearish, establish a low, establish a high, establish a range, break that range to the downside, catapult to the opposite direction. And if you're bearish, you're looking for the exact opposite picture, where you get this massive uptrend. And even here, you know, you didn't get a Wyckoff distribution on high time frames, right? You're not always going to see that. But when you're getting years of consolidation, months of consolidation, you're probably going to be closer to one of the accumulation or distribution pictures than not. And you can also get an additional accumulation at the top, right? Not all distributions lead to massive bear trends. Not all accumulations lead to massive bull trends. So it's a bit wishy-washy, I agree. But I think knowing that it exists, knowing what to look for, just bare minimum, having it in your tool belt, knowing what it is in the buffet, you know, it's not some random piece of meat that you've never heard of, right? Wyckoff, when you cross it on the buffet of that is crypto Twitter or wherever else, you can say, oh, I know what that is. I know what they're talking about. So give us a like or dislike comment below. Let me know what you think about Wyckoff. Let me know if you use it. Let me know if I butchered your understanding of it or not. And lastly, I'll just mention the non-custodial portfolio management tool on Enzyme.finance, where you can watch me or participate in the trading of ETH-BTC through one of our funds. We also have a DeFi portfolio. And how this works is everything is transparent through smart contracts. I don't have custody of anything, but you can see allocations, you can see trades, deposits, withdrawals. No mins, no max. You just pay gas coming in, gas going out, and everything is done via DEXs. The DeFi portfolio is allocated based on DEXs, DEX aggregators, lending and borrowing, oracles, and miscellaneous stuff like wrappers. So you can also let me know what you think about Enzyme in the comments below. And happy trading.